Congress returns to Capitol Hill after Labor Day with a packed political agenda, including avoiding a government shutdown by October 1st. For more on this and what it means for investors, let's bring in Brian Gardner, Stifel Financial Chief Washington Policy Strategist. Thank you for being here this morning.
Morning, Scott.
Here we go again.
Yep.
We going to get a shutdown?
Probably. So I'll give you a little good news, bad news. I'll start with the bad news. Bad news is we're probably going to get a shutdown. It's not 100%. It's definitely over 50%. The good news is that investors tend to look back by this stuff. It's political noise. So if you look back over history, I've gone back the last 50 years. Been a bunch of shutdowns. A lot of them happen over weekends, so there's no market impact. You look beyond those. Look at those shutdowns that lasted over 5 trading days, and there's about a half dozen of them. Basically, the market looks past the shutdown and to whatever else is going on in the economy, fundamentals, et cetera. So just as a primary example, the most recent shutdown is also probably the longest in history, 34 days from December of 2018 to January of 2019. And despite the political chaos, the market went up 10% during those 34 days. So I think investors have and will continue, and what I'm advising our clients to do is look past the political noise on this. It's going to be chaotic. It's going to be a distraction, but the market's going to do what it does.
I really want to turn your attention towards this trip that the Commerce Secretary Raimondo just made to China, because I feel like, it's so interesting. The message coming out of that was, the administration's effort to have somewhat of a diplomatic détente, if you will, with the Chinese, which is so interesting to me as, President Biden's going to go and do another campaign at the risk of being criticized for being soft on China, if in fact that's what the goal was here. How should we view this?
So this is one of a series of meetings between U.S. officials going to China. So take it in the context of that. It's an ongoing effort. Also, the role of the Commerce Secretary, traditionally over time, is a bit of a cheerleader for American business. So there's that tone. And I think that was part of the message that the Secretary brought with her. At the same time, when you're trying to balance out national security and U.S. business interests, we're at a period in time that's probably going to last a while longer, where national security trumps the economic interests of U.S. business. So I take the message and the tone from the Secretary's trip with a grain of salt. To your point, we're going into 2024. There has been an ongoing competition between the two parties of who can look toughest on China. And you have that national security concern that I mentioned a second ago. I think that's the dominant message and theme, despite the Secretary's message over the last week. So to me, I'm sorry.
No, but that's how they would want the message to be portrayed. They're going to be portrayed potentially as softening on China because of this dialogue that the Commerce Secretary apparently was trying to rekindle, if you will.
So I think the message is going from this trip is going to fade into the background, because you have another series of events that will be coming up, especially the USTR, the U.S. Trade Rep's decision on China tariffs. And I'm expecting at some point those tariffs, which were implemented in 2018, which have to be reviewed, that review process has been going on for a year. I think the bulk of those tariffs are going to remain in place with very little, if any, relief. And I think that is going to be the dominant message that is going to overcome the message from the Raimondo trip. So, Raimondo and U.S. business may want a certain message, but I think the political message of 2024 is going to be more in line with what's coming out of the USTR.
Brian, is it too early to think about the sectors that will be impacted the most by election year rhetoric? And I'm thinking specifically of healthcare, with recently the unveiling of the 10 drugs that are going to be subject to price negotiations with Medicare on the Part D side of things. Should we be looking for a rough road ahead for healthcare? It seems like they are, again, squarely in the crosshairs.
So, in terms of red state, blue state kind of, and sectors, healthcare is a little bit tougher because, and I guess I can back up and say what I'm about to say colors all different various sectors. You have this populist movement within the Republican Party, and so it makes it gauging the impact, the post-election impact, a little tougher on healthcare specifically. Now, I think there are a bunch of Republicans on the Hill, populist Republicans, who would be okay with expanding what the administration was done, specifically on insulin. And so I don't think it's as clear a shot. I do think healthcare generally benefits from Republicans taking over government, but not as clear as the past. I think banking, financial services would rally with a Republican takeover. And that's one sector where I think you're going to see more shifts from administration to administration. Financial services, banking used to be a fairly bipartisan consensus on banking regulation. I think that's broken down, and I think you're going to see wilder shifts, bigger shifts from administration to administration. And if Republicans win in 2024, I think financial services is close to the top of the list of beneficiaries.